So just to start off with a round of introductions, I'm Katie Neal.
And I'm Katie Randolph, and we want to welcome you to the Fireside chat. We're going to be chatting today about the future of open finance.
Yeah, it should be pretty easy to remember our names. So good one there. So together we focus on the policy and business barriers to consumer data ownership. I focus on policy. So how do we build an open finance regulatory regime in the US that effectively protects consumers and doesn't constrain innovation?
And I focus on the partnerships angle. So specifically thinking about how do we work with data sources to enable the flow of data into Plaid to power these consumer permission use cases. So today, as we mentioned, we're here to bring you up to speed on open finance. So we'll give a refresher. We'll cover what it is, where policy stands, some emerging use cases, our data access efforts, and the consumer implications of all of this. And I'm perhaps most excited to share some highlights from our recently released study, The FinTech Effect. And before we kick off, I did want to cover some housekeeping. So you'll probably have been in other sessions today, but in case you haven't, there's a Q&A tab on the far right where the chat is. So if you want to ask a question, just type out your question, hit ask a question. It may not show up immediately, but it'll be in our moderator queue. And then we'll leave a couple of minutes at the end to answer them. All right, great. All right, well, further ado, before we dive into the thick of things, Katie's our resident policy expert. Katie, can you give us a quick overview of what open finance is?
Sure thing. So first off, there's open banking, which says that consumers own their bank account data and can provide this information digitally to a fintech or bank. Open finance takes us a step further, and it goes beyond open banking, extending this concept of data ownership to all aspects of a consumer's financial life. So it's this big idea that consumers have control over their full range of data that they use to make financial decisions, which may include data as diverse as payroll, investments, credit, debt, student loans, mortgages, all that fun stuff. And in order to manage their financial lives, people need insight into all of their data. So we're actually going to talk about that a little bit more later. So I'm going to leave that as a little cliffhanger here.
Thank you. I appreciate that. And where are we now on this regulatory and policy journey to open finance?
Yeah, that's a great question because it's been a long journey indeed. So after the financial crisis, Congress passed Dodd-Frank. There was a mostly unnoticed provision in there called Section 1033. Section 1033 is just 75 words, but it effectively stated that consumers own their bank account data and should be able to share it where they choose. So thanks to this provision, consumers have been able to access an entirely new marketplace of personalized goods and services like low-cost remittances, overdraft protection, automated savings tool, a whole gamut of tools that everyone in the audience provides. And due to this explosion in usage and the increase in fintech we've seen, the Consumer Financial Protection Bureau started doing a 1033 rulemaking process over the past year. Dodd-Frank says that consumers own their bank account data, but now the CFPB is actively defining what that means. So that includes questions like, what types of data fields must be made available? Should there be a data security requirement for entities that access consumer data? Should the CFPB supervise fintechs? These are all big questions indeed that I'm sure we're all thinking a lot about. And recently, President Biden actually encouraged the CFPB to move quickly on this rulemaking in order to facilitate more competition in financial services. So the easier it is to switch bank accounts or access new products, the more everyone is going to step up their innovation to keep consumers happy. So really quick overview, plain terms, the industry landscape pretty much shifted overnight from whether 1033 will happen to how it's going to happen. We'd actually love to push the mandate included in 1033 out to all financial data. So we're hoping for something more expansive that would apply to payroll providers, telco companies, and even fintechs. As fintechs grow, we increasingly become sources of valuable data for consumers, and it's important that we're able to share that data outwards as well. So all that goes to say, it's an exciting time for data access. I touched on some elements of new types of data access, but I'd love to hear from Katie, the other Katie. What are some examples of emerging use cases that could be powered by a shift to open finance?
Yeah, absolutely. And thank you for that overview, Katie. For those not familiar with the Plaid environment, we frequently refer to 1033, like in every other word that we use. So it's certainly a hot button topic here. terms of use cases, I've recently been focused on supporting our new income product. And for those of you who tuned into the keynote this morning, you probably heard Kate announce it. So a lot of the use cases that I've been seeing are very specific to using real-time income and employment data, which is what our income product delivers. And two that I'm really excited about, I mean, there's so many, but two that I'm pretty excited about are early wage access, sometimes called earned wage access, which is basically giving employees access to earn wages before their scheduled payday. This morning you heard, I think it was Jean-Denis highlight Branch, which is one of our customers. And they can see, for example, that you've worked 3 shifts at Walmart and can then pay you for those shifts before your scheduled payday, which, as you can imagine, gives consumers a lot of flexibility with bill pay and other financial needs. The other use case we've seen is also specific to wages. It's wage optimization. So I think Steady does this really well. They can see how much you've made this week from, say, your Amazon and your Uber shifts. This app very much caters to the gig economy workers. And they have this cool feature where they can actually see whether you're on track for your savings goals. So you've worked your Amazon, your Uber shifts, and you can see, okay, given this rate, I'm on track to pay rent this month or I'm not. And then you can actually crowdsource other jobs that might be a more efficient way to earn that same income or higher. So those are just 2 examples of many use cases we've been seeing.
Some of my favorite use cases as well. So I know that those require different types of data. I'm curious about how we're approaching data access to service those use cases. We obviously have several years of experience in accessing bank account data. Are we seeing similar barriers with this type of data, or are there new barriers that we haven't even thought of before?
Yeah. So long story short, we're taking a similar approach to these payroll conversations as we are with our bank conversations. But the landscape is a lot more complicated, and I'll tell you why. So taking a step back, you think about where is bank data? Bank data is with the bank. It's pretty simple. Well, it's not pretty simple, but it's with the bank. Payroll data can be with one of 2 sources. So it's either with a payroll or human capital management platform, often abbreviated HCM, like a Paychex, or it's with an employer directly that processes their own payroll. So for example, Uber processes their own payroll. So as you can imagine, it's already like a pretty fragmented landscape. There is an existing precedent for sharing this type of data. So there's kind of 2 models we've seen in the market. There's a back-end data passing model, which is generally the way this data is passed to credit bureaus, which does not involve the consumer, reviewing that data beforehand. It's shared. Or there's a manual process. We actually see that a lot of income verification today is heavily reliant on paper processes and physical documentation. So right now we estimate that about 60% of Americans have a digital payroll record. So it's not full coverage, but there's certainly like a big chunk that we can make a dent in. And accessing this data via consumer permission model has been pretty challenging. And we're working really hard to break those barriers down, but it's been pretty challenging. If I had to kind of break down what are the biggest barriers that we're seeing, no clear 1033 mandate is a big one. So the fact that we don't have like explicit regulation that mandates that these payroll providers or data sources give this data to consumers in a portable format is a big hindrance. And not having this mandate has several consequences. So the biggest one is that a lot of providers or data sources don't see data access in this space they see it as a nice to have. They don't see it as a need to have or a consumer right. So the sense of urgency around accommodating it is a lot lower. And for the providers that have built APIs, for Plaid to access this data, those APIs are pretty nascent and they're not always compatible with Plaid's consumer permission business model. And for the ones that have built APIs that work for Plaid, there's an emerging pay for data precedent. So this makes data access in some cases prohibitively expensive for certain use cases via API and is difficult for data access purposes. Another whole can of worms that we've been seeing is this question of data ownership. So many payroll providers actually view the data that they have as owned by both the employer and the employee. And some of them even go as far as to require both the employee and the employer to consent to data sharing. So for example, if I wanted to access my income and employment data from my data source, Plaid would also have to consent to that as well. As you might imagine, that creates a ton of friction in any sort of onboarding process, which can be really prohibitive to accessing data. So don't want to be a Debbie Downer. There's a ton of barriers we're working through, but we're still in the very early days. And this is part of the reason why increased regulation and policy in this area is all the more important to help make this type of access more accessible. Make this access more accessible to help achieve this type of access. So yeah, clearly we have a long way to go, and the conversation really needs to reorient around the consumer. And part of this is making sure the consumer sees a benefit to permissioning access to new data elements and feels safe and secure in doing this. So Katie, I'm curious, do you think that increased regulation in this area could help increase consumer trust?
I just want to say accessible access is great. I also like that. But yeah, I think we can always be better in terms of consumer trust. We're actually looking forward to Dodd-Frank 1033 rulemaking to increase opportunities for trust with consumers. This includes a very bold call by Plaid for the CFPB to supervise data aggregators. So we think that supervision will make banks and consumers feel even more secure when connecting their favorite financial accounts. And FinTech does have some catch up to do in the areas of trust perception. So while we think that we're all awesome in this room, we can always be better. According to the Plaid FinTech Effect, which is our 2021 report with Harris poll that Katie referenced, banks and traditional financial service companies generate the highest trust when consumers think of financial information security. As you can see, only 63% of consumers think of fintechs as very or somewhat trustworthy compared to better scores for financial services and tech companies. We think 63% is good, but we'd like to be at 100%. And we could really start to earn consumer trust in a variety of ways. Some of this lack of trust may be because expanding data access is relatively new in the grand scheme of things. And like all things new, we have to overcome hurdles. So for example, consumers sometimes incorrectly view fintechs as perpetuating security and privacy issues. And there's also this misconception that fintechs aren't regulated. On that regulated piece, we all know that we're subject to any applicable laws and regulations out there, but we do expect more nuance and fintech-specific regulation to come down the pipeline. And perhaps that will help with some of that perception. As for security and privacy, you've heard in this forum today about our commitment to the state-of-the-art privacy tools. We think fintech should always strive for greater protection and ease of consumer understanding. And of course, there's always the concern about credential sharing. We're committed to moving to bank APIs, and we've even built our own bank API called Plaid Exchange, as well as other flexible technical solutions to enable credential-less data sharing. So it's safe to say we're excited about this transition. We think we're up-leveling the ecosystem, and we're ready to be at 100%, hopefully sometime in the future. So all this is to continue to say, we think that if implemented well, 1033 can go a long way to help enhance consumer trust. This could be through requiring more transparency in the ecosystem, allowing consumers to see the entities that touch their data and to revoke access to and delete the data at these entities with just one click. Well-developed guardrails can go a long way in ensuring both innovation and that best-in-class market practices around consumer privacy and security persist. And it's really important that we continue to develop these best-in-class practices because consumers have very high perceptions of fintechs in other areas. So according to the Harris poll again, fintech companies are more likely to be perceived as easier to use, fast, innovative, affordable, and have the latest features or functionality. That felt like a bit of an ad, but it's true. 76% of Americans say that when choosing a bank, the ability to connect their accounts to apps and services they want to use is a top priority for them. And 69% would consider switching banks if they can't do that. So we're no longer the new kids on the block. People expect to be able to use us. And with that comes increased expectations and scrutiny. I would argue that we should be embracing that and keep building the best products and experiences to deliver on it. So that's all to say that it's an exciting time, many barriers and many more rules of the road to be built, but there's a lot going on. So if you're intensely focused on building fantastic products and not closely following these broad shifts in digital finance, what are the most important takeaways from all of this, Katie?
Sure. So the first is that open banking regulation is coming, which we're very excited about. The second is that Plaid is trying to push this one step further to include a broader set of open finance use cases. So we talked today about income and employment use cases, investment data, utility data, and that's just the tip of the iceberg. FinTech is growing. Adoption jumped 30% year over year from 58% to 88%, which is just really encouraging. And this is increasing across all use cases, including some of the ones I mentioned today, and traditional use cases as well. And Plaid is really working to meet this demand in 3 ways. So the first way is that we're growing our financial access team. So we're working really hard. This team is focused entirely on data access partnerships with banks. And specifically, they're supporting banks in their digital transformation, and they're trying to meet consumers' needs for data access. As of today, we're formally partnering with the majority of the top 10 US FIs on their open banking initiatives, and we've engaged dozens more and hope to increase the number of formal partnerships over the coming years. The second thing we're doing is engaging new data sources. So I mentioned earlier, we're having a lot of conversations with payroll providers and other data sources that house payroll data, and that's just one example. And we're in active conversations with them to figure out what are these barriers that exist today and how can we potentially work through them on behalf of the consumer. And then finally, as Katie mentioned, we're building best-in-class privacy practices to facilitate consumer trust. And this is really at, a pivotal cornerstone for product development here at Plaid. And hopefully you've heard that echoed throughout the rest of platform as well. So with that, that's the extent of the shared content we had. We will open the floor to questions. So just as a reminder, if you weren't here at the beginning, navigate to the Q&A tab and ask your questions there. All right, looks like we have one question here. I can remove my bank's link to Plaid, but I don't have a way to request my bank data to be deleted from Plaid's clients. Are there any movements in the regulatory landscape around data retention?
That's actually a great question. I'm happy to sort of dive in on that one. So a few thoughts on that. One, every company is beholden to their own CRPA obligations. So every company that has a relationship with the consumer is required to actually process a deletion request from a consumer and delete data if they receive it. However, I do think that there can be technological solutions where if a consumer comes to someone like Plaid or another intermediary who's kind of in the middle of everyone, that consumer could say, delete all of my data at Plaid, but also delete my data at this FinTech app. And that's what I was speaking about a little bit with the one-click deletion. That's not something that's live in the ecosystem today, but I think it's something that would definitely improve consumer use, and also just the ability to delete data from one entity rather than having to go to every FinTech app you've connected and delete data, and to every bank that you've shared your data with and delete data. It'd be much easier just to do it all from one source and have those sources communicate to each other. So like I said, while that doesn't exist today, it's something that feasibly could exist in the future. And I know that regulators would be very excited about something like that. It would definitely improve consumer understanding and use throughout the ecosystem. So I think it's a great question, and hopefully something we can continue to innovate on.
Thanks, Katie. I've got another question for you here. So this one comes from Steve. Steve says, recognizing it's been 13 years since Dodd-Frank was passed, how long until 1033 rulemaking is drafted, passed, and implemented? This is a great question. I'm curious to know the answer too.
Yeah, I want to know the answer to that as well. If I had to guess, I'd say in the next year and a half. So to be fully transparent, we've been engaging with the CFPB, explaining sort of how the field and industry works and how Plaid works. They're very involved in collecting information. They're all getting very into the weeds on how the FinTech ecosystem works and how data sharing works. And that's always really exciting to see, because it means that they're trying to understand what's going on in the market today, and in order to enable innovation to continue to exist while putting in those appropriate guardrails we spoke about. So I think the information phase will take a little bit longer. They did mention I saw this offhand, but April 2022 as potentially the next date where there might be movement on something 1033 related. If I had to guess, it would be like a small business roundtable in order to provide feedback to any ideas that they've been cooking up, and understand more where the industry can comply and what might not be possible for the industry to comply with.
Thanks, Katie. All right, let's see. We've got another question. What is the most exciting aspect of open finance that you think will change a consumer's life? I can offer my perspective, and Katie, I'd love to hear yours. So the whole open finance to me is really just like collecting as many data points on a consumer's financial life as possible to better inform decision making. And so I think it's really just like the opportunity to have data more readily accessible and ideally in real time, which I think is like another piece of open finance. Like when we think about the income and employment space, historically, you can look at the data the bureaus have or other entities that's in some instances several months old. And you can look at Plaid's income product and other products that are pulling in income and employment verification in real time. And I can see how much I made last week. And especially for folks who have incomes that fluctuate, those types of data points in real time feeding into their personal financial management apps is really powerful. And there's so many cool different permutations that you can queue off of that to then pay off loans based on like the highest APR, the one that's due earliest. So yeah, I think it's really just like increasing the signal that we have to better arm consumers to make better decisions and to automate some of those things for them so they don't even have to think about it.
Yeah, that's a great answer. So like, in all honesty, my favorite answer is a little cliche, so I'm not going to go too much into it, but I think credit access. Like, I think we have a real credit access problem and risk assessment problem in the US. We have credit bureaus that can have contracts in place to gather all the data. Then we have one basically industry accepted model that underwrites that data. So I think that there's a real opportunity to actually use more reflective data points and more reflective technologies to do underwriting. But I feel like that one's been talked about a lot. If I had to like say something that's going to impact the greatest number of consumers, honestly, I think that there's a bar between people that are super involved with their finances. They have everything automated. The second money goes into their account, it's allocated towards a certain type of spending portfolio. I think that there's a lot of really high touch consumers that do that. But I would love to see that gather traction at the masses and to find tools that are super easy to do that for the majority of people. Like the second your paycheck enters your bank account, you have a series of obligations you must meet and a series of aspirations that you want to pursue. And so I think if there's a way to ensure that the majority of consumers are able to almost immediately allocate money towards their most important priorities, that would be a huge boon to a lot of consumers. And right now that is possible, but it's possible primarily among people that are already super involved with their finances anyway. So I like to see that become more mainstream and honestly much more easier. It's kind of a pain to like go in and automate all of that, and it takes forever. I've started and stopped it a bunch of times, so I can speak to that personally.
That's also a great answer. I don't know about you, but I constantly check on payday to see when my paycheck has hit.
Yeah.
All right. We've got another question for you, Katie. This is from Simon. Simon asks, are the rulemakers looking at PSD2 in Europe for ideas around implementation for 1033?
Yeah, absolutely. I mean, like PSD2 is really interesting because everyone says that Europe got to open banking faster than the US. But when you look at the actual use cases that are prevalent and the number of fintechs that are prevalent in Europe, there's a ton more in the US. Like there's a magnitude more in the US. So yes, there's open banking regulations in Europe, but there's actually like in market-based open banking solutions in the US that have taken hold much more strongly. PSD2, I think there are a few pieces of it that regulators will probably look at. One, like, and a piece that we're not super excited about with PSD2 is it only applies to transactions data. So any data that is at a bank account that's not, that only applies to payment data. So any data that's at a bank account that's not transactions or identity that's used to make a payment, that's not currently covered by PSD2 and the APIs that are available there. And secondly, PSD2 had pretty heavily mandated API development, and it took forever to get those APIs off the ground. It's also much easier to do there because there are 9 main banks, and in the in the UK, there are 9 main banks. In the US, there's 11,000 banks, so it's not quite the same that we've seen. Europe has a little bit more consolidated banking infrastructure. So I think that there's a few pieces that I would recommend to regulators to look at, and one of them is right now they have a reconsent protocol. It's actually probably like a little too frequent in Europe, so they would require consumers to reconsent their bank account data every 90 days. They've since moved on that. We think that consumers should have to reconsent their bank account data a certain number of times per year or once a year, so that it's actually, when consumers are sharing their data, they're reminded like, hey, you're sharing your data here. Are you sure you're still using this app? I don't know about you all, but I definitely have apps that I no longer use that are on my phone that are collecting my data. So it would be nice to have to reconsent so that data is not just collected in perpetuity. I also think that some of the other areas they might look to are just the idea of use case-based data access. And this is one that has potential to be okay, but it could be problematic depending on how it's done. But use case-based data access is something like, here's all the data fields needed to power this particular use case, and here's all the data fields needed to power this particular use case. So I can imagine them looking at something like that to avoid over collection of data. However, like what you get with use cases when you're lumping them all together, it makes it really hard to innovate around new use cases because those data fields weren't defined previously. And as Katie talked about, we've seen a ton of barriers of access to new use cases. And the other thing it does is it makes it, it actually results in data over collection because you're recreating data sets that are already available to the end data recipient. So I think there's some interesting things about PSD2. I would caution regulators here to take it to try to apply it too broadly to the US for those specific reasons. Carly, I think you might be sharing your screen still, by the way.
All right, we've got another question for you, Katie. So many questions for you. Paul asks, who is representing consumers in enabling the open banking journey as regulation is updated?
Who is representing? I'd like to think Plaid's representing consumers. I know that's probably like a little biased, but every conversation we have with the regulators are like, here's what we're doing. Here's where we could be better. Like to the earlier question about like, should there be data deletion throughout the entire ecosystem? Like, yeah, we're not doing that today, but we could be doing that. It could be better. It could be much more consumer friendly. But there are a ton of consumer advocacy groups that are really involved in this space. When you look at like NCLC, and then FinReg Lab and a number of Financial Health Network, there's a whole host of consumer advocacy groups that are representing consumers. There's FDX, which is an API standard setting body. While they aren't directly representing consumers, they're representing the larger financial industry and helping to set standards for APIs that can be live in the marketplace that consumers would use to permission their data outwards. So I think in generally, like one of the ways that we represent consumers, Katie knows this very well, is we always advocate like for the full data parity, making sure that anything a consumer can see or share manually, like they should be able to share through an authorized provider. And the reason we think that's so important is because when we see data limitations or like a lack of frequency of data shared, then we kind of get into consumer harm and consumer impact. And you can imagine something like, if your balance data is only refreshed one time a day and you're using an overdraft protection app, like that's not really a protective tool anymore because your balance data is not up to date. I don't know, Katie, do you have anything else to add to that? I feel like I know you used to work in this space.
The only thing I would also add to that is, like I know we have a ton of customers attending our forum, but it's our customers who are creating new use cases that meet the needs of our consumers. And like we're grateful to you for bringing those ideas to Plaid and saying, hey, this is really to the net benefit of the consumer. How can we enable this? And how can we get the data, or how can we build a product that helps to support this? So it's really a collective effort. And the more we can share ideas and bubble up these consumer needs, the better.
Yeah, that's a great addition. Thank you for that.
Of course. All right, we have 1 minute left. Let's see if we can squeeze in one more question. This is a quick one. So someone asks, what is the status? Oh, it just disappeared. Let's see. Hold on. Oh, what's the status of the consumer-facing Plaid dashboard a person can visit to easily decide what data to share and what data not to share? So that's a great question. It's called Plaid Portal. It's currently in beta. So if you want to check it out, go to my.plaid.com and you can actually create your own profile and check out the experience for yourself. I think the current timeline is launching at some point next year. But as I mentioned, it is still in beta, and we welcome any feedback on it. We're really trying to make it as intuitive as possible and as comprehensive as possible.
But it's definitely still usable today if you want to go, like as Katie mentioned, if you want to go try it out. You can revoke all of your access to any fintech app you want or delete your data from there. And then also if you have there's obviously we're still ready, like working to get it live. So if you have any experiences you'd like to share with our team, you might have met the consumer privacy team earlier today if you were attending that session, but they're always down to hear more feedback on the products.
Great. Well, I think we're 1 minute over. Thank you so much. You've been a great audience, gotten a wealth of questions, and the Katies are very appreciative of you spending this time with us today. Hope everyone has a good rest of the day.
Thanks, everyone.